Well, we've incrementally slipped a little lower and the Nifty is now below the 200-day moving average. 17,595 is the 200-day moving average. The Nifty at the low point of trade, 17,587. But nothing really to worry about. The first test of the 200-day moving average the last couple of days ago was supported and we are pretty much in the support zone itself. It's the mid-cap index which is facing a deeper cut, down almost 0.2%. And the Nifty banked down by about 0.5%. All eyes will be on Reliance, and then there will be ICICI reporting their numbers over the weekend. So Monday we'll see an impact of these two heavyweights on the index. But that's about the equity markets. Let's talk all things commodities. Manisha.
Thank you so much for that. And I'm looking at the crude oil prices because, last 4 weeks have been constant gains and we saw crude oil prices gain up by nearly 14% in last 4 weeks. But this week started on a weaker note and then we've continued to decline. 3% down overnight. It's down 6% on week. On a month-on-month basis, still trading in the positive by 9%. Paul Hickin is Editor-in-Chief, Petroleum Economist, and he joins us now to talk further about that. Paul, hi, good to have you. What is your sense on what the crude prices have done this week? Because we've basically given up all the gains after OPEC and allies did that surprise cut. All right, we lost Paul, looks like that, but I'll tell you some more fundamentals here because we've seen prices go under profit-taking. Also because the markets are looking at very uneven demand recovery coming in from China. The kind of economic data that we've seen, the first quarter GDP numbers were on the stronger side, but all the other data slightly less than what the street was anticipating on an year-on-year basis there. The markets also have seen Russian exports continue to be stronger. Even as they have done output cuts, we still have seen exports actually at pre-COVID levels. So 2019 highs is what we are seeing in sense of Russian exports. And the markets are a bit concerned about the interest rate hikes as well. 25 basis point of a hike in the May is given and factored in. But the street is now worrying itself if whether or not there is going to be yet another rate hike, even if it is 25 basis point in the month of June as well. And not just US, there are similar statements coming in from ECB, Bank of England and Reserve Bank of Australia also says that the rate hike pause may be temporary and they will continue to look at the economic data before they make any more sense on where they are going on with the rate hikes there. If you look at the demand sense, we also have seen the crude oil inventories in US see a surge, and that pretty much has been the case with gasoline and distillates as well. So demand not so great, production has been on the higher side. So all attention now on the demand numbers rather than supply, because supply seems to be fine and on the higher side. But if the demand doesn't pick up, then the markets perhaps could continue to languish going forward.
All right, Manisha, thanks a lot for that. That's about the crude oil space. But there's also a lot going on in the electric vehicle space, and that's something that consumers can look at. The Indian government is not in favor of extending the EV subsidy scheme, but that was the word coming in from Rajiv Bajaj. We'll speak about that in just a bit, but in the meanwhile, we have Paul with us.
All right. Paul, we've been trying to get you and we've been getting in an off and on you, but tell us on what's your senses on prices.
Yeah, sorry about this. I'm on a train to see the IEA in Paris. But basically, it's a question of confidence in the market. We've seen China, the good data that came out of China for the first quarter, but still the market's not confident that China's going to continue this strong recovery. The same thing is being said from the US and the OECD, where there's still these concerns of banking crisis. There's still concerns that interest rates are going to keep going higher, and that is keeping a cap on confidence. So no one really wants to push the market too far higher right now. And you've got the OPEC plus voluntary cuts, which are trying to put a floor under the market at that $80 a barrel level. So really we're in this kind of volatile range where we're really waiting to see the China and the US to turn the corner in both in a positive way.
Paul, what's your own sense? I mean, we're just about holding 80 now for Brent. We've come down all the way from nearly 87, 88 on the higher side. Are we going further down as Brent also is at risk of breaking 80 on the lower side?
I think it's going to be very difficult for the market to really push the market below 80 given those OPEC plus production cuts. I think really we've reverted back to the range-bound trend before prices, and it's going to be another shock. And I think shock coming out.
Paul, also, how are you looking at the Indian and Asian demand going forward from here? Because all hopes were on China.
Right.
It's one of those days.
It's one of those days. So we're you know, just like one of those hybrid cars, we're shuttling between both electric vehicles and crude oil vehicles. So